I'm going to explain taxes to you using pickles so your tiny fermented brain can finally understand why you're broke. Greetings, fellow preserved vegetables, and welcome to the annual festival of financial anxiety known as tax season. It is that special time of year when the great harvester in the sky, also known as the federal government, demands a percentage of your internal moisture to keep the societal refrigerator running. You see, being a cucumber of society isn't free. You have to pay rent for the jar you inhabit, and the calculation of that rent is intentionally designed to be as confusing as reading a nutrition label in ancient Aramaic. Most of you are currently panic-sweating vinegar because you threw your receipts in a shoebox and hoped for the best, which is a terrible strategy for avoiding federal audits. I, Chill Dill, am here to break down the sheer absurdity of the tax code using the only metaphor you understand: cucumbers, brine, and the inevitable decay of organic matter. We will cover the forms, the brackets, the deductions, and why getting a refund actually means you're bad at math. So, sit down, uncork your lids, and let's discuss how to pay your tribute without getting turned into relish. First, we must distinguish between the two primary castes of tax-paying vegetables: the employee and the freelancer. If you are an employee, you receive a W-2 form, which is essentially a report card telling you how much brine your employer already stole from you throughout the year. It's painless because you never saw that money in the first place. It's like being born missing a toe. You don't miss what you never had. However, if you are a freelancer, you receive a 1,999, which is a document that says, "Hey, remember all that money we gave you? You probably spent it on fertilizer and fancy jars, but guess what? You owe us 30% of it right now." The freelancer Pickle lives a life of delusion, thinking they are rich until April 15th rolls around and smashes their dreams with a sledgehammer of self-employment tax. The W-2 Pickle sleeps soundly in a jar of security, while the 1099 Pickle wakes up screaming about quarterly estimates. Now let's talk about tax brackets, a concept that 90% of you misunderstand because you skipped math class to smoke dried basil behind the gym. People think if they earn enough to move into a higher bracket, all their money gets taxed at that higher rate, and they end up with less money than before. This is completely false. Tax brackets are like shelves in a pantry. You fill the bottom shelf with cheap vinegar first, which is taxed at a low rate. Once that shelf is full, you start putting your excess earnings on the next shelf up, and only that specific overflow gets taxed at the higher rate. You do not retroactively pay more for the vinegar on the bottom shelf. So stop refusing a raise because you think it will bump you into a higher bracket. That is the logic of a vegetable that has been fermented in stupidity. Take the money, fill the higher shelf, and quit complaining about having too much brine. We arrive now at the battle of the deductions, the standard versus the itemized. This is basically a choice between laziness and hoarding trash. The standard deduction is a flat amount the government lets you ignore, sort of like a "thanks for existing" coupon. It's easy, it's fast, and it requires zero effort, which is why most of you pick it. Itemizing, on the other hand, is for the neurotic pickles who kept every receipt from every medical exam and charitable donation of old jar lids. You have to list out every single expense to prove that your life is so expensive and miserable that you deserve to pay less tax. Unless you own a massive jar, a house, and pay a lot of interest on your mortgage, or you donated a kidney to science, the standard deduction is usually better. Don't spend 3 weeks adding up the cost of your work uniforms just to save $4. Your time is worth more than that, even if you are just a garnish. Tax credits, the holy grail of filing. Unlike deductions, which just lower the amount of income the government looks at, credits are a direct dollar-for-dollar reduction of your bill. It is the closest thing to free money you will ever see. The most famous one is the child tax credit, which is the government's way of saying, "We are sorry you have to raise those screaming mini cucumbers. Here is $2,000 to buy headache medicine." There are credits for education, credits for solar panels, and credits for being low income. If a deduction is a discount coupon, a credit is a gift card. You want as many of these as possible. If you don't have children, I suggest you don't acquire them just for the tax break, because the return on investment for a child is negative for at least 18 years. Stick to the solar panels. They don't ask for college tuition. Let's discuss FICA, or the Federal Insurance Contributions Act, which is a fancy way of saying money for the old pickles. You look at your paycheck and see a chunk missing for Social Security and Medicare. This is you paying into a giant pot so that when you are old, wrinkly, and soft, The government might give you a few drops of brine to keep you moist. Many young cucumbers believe this pot will be empty by the time they retire, which is a valid fear, but you have no choice but to pay it. It is a mandatory subscription service to a future you might never see. It is the ultimate pyramid scheme, but one backed by the US military, so I wouldn't recommend opting out. Just pay the 7.65% and pray that civilization doesn't collapse before you turn 65. Filing status is how the government judges your personal life. Are you single? Married filing jointly? Head of household? Or married filing separately because you hate your spouse but can't afford a divorce lawyer? Single is the default setting for lonely pickles. And it comes with the highest tax rates because the government assumes you have no one to spend money on but yourself. Married filing jointly is usually the best deal. It doubles your standard deduction and widens your brackets. Essentially, the IRS incentivizes romance. If you are lonely and broke, finding a spouse is technically a tax strategy, though I don't recommend proposing with a 1040 form. Head of household is for single parents who are carrying the entire jar on their back. It offers better rates than single, acknowledging that your life is hard enough without the IRS taking more of your money. The audit, the dark legend, the boogeyman of accounting. An audit is when the IRS decides your numbers look a little too creative and sends an agent to probe your financial history with a microscope. The chances of this happening are actually very low, less than 1% for most pickles. But the fear keeps you honest. Red flags that trigger an audit include claiming you donated 50% of your income to the Church of the Holy Gherkin, reporting zero income while owning a yacht, or running a business that has lost money for 10 years straight, which is technically just a hobby. If you get audited, do not panic. Do not try to bribe the agent with jars of homemade relish. Just show them your receipts. If you don't have receipts, well, prepare to be squeezed until you are nothing but dry skin. Capital gains. This is a fancy term for money you made by having money. If you buy a jar for $10 and sell it for $20, that $10 profit is a capital gain. The government loves this because you didn't actually work for it. Your asset did the work while you sat on the couch. Short-term capital gains, assets held for less than a year, are taxed just like your regular job income, which is painful. Long-term capital gains, assets held for more than a year, get a special, lower tax rate. This is the government's way of rewarding you for having patience and not panic selling your stocks every time the market dips. If you are a crypto pickle who trades dog coins every 4 minutes, enjoy paying the high rate. If you are a wise old dill who buys and holds, you get the discount. Patience pays, quite literally. Finally, the refund myth. Everyone loves getting a big tax refund check. You treat it like a lottery win. You buy a new TV, you go out to a fancy dinner, you buy premium brine. But listen closely, you absolute walnut. A refund means you overpaid the government all year. You gave the IRS an interest-free loan. You let them hold your money for 12 months, and now they are just giving it back to you. It's like buying a coffee for $5, handing the barista $10, and then celebrating when he gives you $5 back a year later. Ideally, your refund should be zero. That means you kept your money in your pocket all year long. So stop celebrating your refund like it's a gift. It's just your own money returning from a long, boring vacation in Washington, D.C. And there you have it. The majestic and terrifying cycle of taxation explained. You work, you earn, they take, you cry, and then you do it all again next year. The system is designed to be painful, so you pay up just to make the headache go away. My advice? Hire an accountant if your math skills are limited to counting on your fingers, or use software that holds your hand like a toddler. Do not ignore the IRS. They have the patience of a glacier and the mercy of a blender. Now go gather your documents, file your return, and try to keep enough brine to survive the winter. I am Chill Dill, reminding you that in this world, nothing is certain except death, taxes, and the fact that you will eventually be eaten. Like and subscribe for more explanations that will ruin your day.